So my name is Trisha. I am with IMA Ventures. Just a brief background of who we are and what we do. We are IMA Ventures. We're based out of the IIM campus in Ahmedabad. We are a technology investing and startup support platform, and one of our core areas of interest is inclusion tech. In the past, we have very closely worked with startups that are building for the Bharat segment, specifically for financial inclusion. Over the last 1.5 years or so, have been running a focused circuit on startups that are building gender intentional solutions for women at the last mile. And this forum is really our effort to discuss our ideas, find a common station for folks to come together and talk about the latest that they are doing, what common challenges they're facing, any experiments or any experiences that they would like to share. So yeah, so that is about the forum and the initiative that we're trying to sort of establish. Before I hand over to Neha, I'd like to maybe briefly go over what the format that we're going to be following. So I will, once I'm done, I'll hand over the mic to Neha. Neha will open the forum today, and the subject of our forum really today is how to develop tightly aligned digital credit for women, for women in rural markets. And this is, I think, a problem statement that has plagued or continues to plague many of us, because there are numbers to show that there is a vast credit gap at the last mile, especially with women micro entrepreneurs and women business owners. And while there is a tremendous net that is being supported by the MFI network, the MFI product really is not the right tool to provide incentives for women to build their own businesses and grow. And so with that in mind, really we thought that, why don't we bring folks together and have a conversation around that. So Neha will introduce the session. She will talk about, is the founder of IndiaP2P, which really is a pioneering take on how to extend women credit to women in rural quarters of the country. She will talk about her experiences, and following that, we will enter into a more fluid, open discussion where we can talk about our own experiences, any of the strategies that we are carrying, what we are thinking, etc. So would really encourage you to come in and participate with your own takes on the problem statement. And with that, welcome Neha. Thank you so much for joining us. Over to you.
Thank you, Trisha, and I hope I'm sufficiently audible. Uh,
I I can hear you.
okay, first of all, hello everyone, and I don't want to speak for very long because I see some names here who are, much experts who are much further along in the lending sector than what I am. But just to give you a quick background of what India P2P does and how we got to this, the thesis for starting India P2P. So before India P2P, I used to run a clean cook stoves enterprise, which makes cook stoves that replace mud chulas. A very simple intervention, which incidentally ends up being targeted towards rural women because rural households use chula and it's mostly women who cook. And over the last sort of 12 years, we saw how the self-help group movement and the microfinance movement was taking off. It was for somebody who was not familiar with the rural markets and this movement, it was quite eye-opening that not just because, but because you're able to put women in groups, that leads to a certain sense of empowerment that leads to them, experimenting with credit, running their own businesses, etc., and how that kind of grew to where we are today, to also observing how microfinance lenders achieved success one step after the other. There was a crisis, then regulation, then coming in of the regulations around credit bureau reporting. And now every 3 months, we see some microfinance lender doing a fairly successful IPO or becoming a bank or some sort of commercial activity happening in this space, which is indicative of the fact that as a lending category, it is a very successful category. So lending to women makes lenders reasonable money. And yet we have a huge credit gap in the segment, like most segments in the Indian economy. And yet we have some very very gender related barriers that are not enabling the borrower base to grow as quickly and as widely as it should. So the reason for starting India P2P was to unlock a new source of capital for women borrowers, and also simultaneously lend to those women borrowers who were graduating out of microfinance. So these were, and over the years, we also saw some changes that were happening in microfinance where there was, like a lot of MFIs today have trouble setting up groups. It's very hard to get three women, even just three women, to get together to form a group and meet weekly, monthly, so on and so forth. And then you also had women borrowers who we noticed that had higher credit requirements, or a very different type of business, thereabouts, so on and so forth. And it just seemed like a very exciting premise to work on, because over the years, I thought to myself so many times that, the microfinance sector charges 20% plus interest rates. Why can't I lend directly and earn this high interest rate, and, just everybody is happy that ways. So India P2P is simply an attempt to unlock retail investment capital for women and small business owners on the other side. We do have some percentage of male borrowers as well, but they're still in the single, digit percentages. And over the years, it's only been 2 years, we've learned, we've kind of right. So we've had challenges on how to convince lenders, retail investors, that this is a good investment category to invest in. And simultaneously, we've had challenges in terms of how to reach out to more women and get more women to borrow from us. Even today, we have women who've been running successful, shops or businesses for the last 8, 9 years. They might have taken a microfinance loan and then nothing for some time, and instead of a non MFI lender borrowing from a non MFI lender like India P2P, they'll go out and borrow from a money lender, just because of familiarity, just because we think that it's just harder. It's the way women make decisions about borrowing are different from how we typically imagine men to make decisions. So you're used to making decisions in a group setting, and now you're kind of not so comfortable taking this decision on your own. Also, we are a new lender, and you have some comfort with taking a loan, an informal loan from this money lender, who's going to obviously going to charge you more and possibly trouble you more if you fall back on repayments. So we've had all of those. Those are some challenges that we continue to grapple with. There have been some interesting learnings along the way, like some of our hypotheses haven't panned out. We thought that we could be a lot more digital, and in some geographies, maybe just a purely digital lender. That was a complete no-go very quickly enough, because until and unless we did not have individuals or people presenting India P2P, women would just not come forward to borrow, because you're scared. What is this app? Even if somebody's introduced it to you, you're just scared of borrowing from an app online, which even I would be, because I really don't know what's happening just behind the digital front end. But maybe because you've seen microfinance, maybe you've seen other forms of lending institutions with physical offices and physical presence, that seems to attract borrowers better, and which is why, as today, we are a model where we meet each and every of our borrowers. It's expensive to do that, but we actually go out and meet each and every borrower who applies to India P2P and clears the preliminary pre-check. And of course, then a good bunch of those go on and make it to the platform. So sorry, I don't know how long I've been talking, not long, hopefully. But so we go ahead and do that. So not a purely digital platform. That is one lesson that we've learned. And another lesson that kind of carrying forward from Greenway's time is the fact that we need to meet women in groups, even if they're not a self-help group or a joint liability group. It just becomes important to meet multiple decision makers, individual decision makers together in a group. And as a business, I would say it's a little hard to meet that challenge, because you have fixed costs, you run branches, you run agent networks, etc., etc. And the agents do need to meet a certain number of eligible borrowers over a month to justify their cost of being there. So one problem is you cannot be purely digital at this point in time, and I'm very happy to see some solutions come up here of being more digital. And on the other hand, you have a physical presence that needs to have a certain critical mass in terms of meeting borrowers and meeting eligible borrowers. Now, on the other hand, the critical mass problem is not, it's a very solvable problem because you have enough borrowers. India is a country which is very hungry to borrower, whether you're young, old, male, female, it really doesn't matter. You have a lot of borrowers. If you look at credit bureau data, there are some 80 million women with an active credit score, which is close to about a third of all active borrowers in the economy by the number of borrowers, value of borrowing being different. So it's a huge market, and yet it is a market which has some sort of a curtain in between that we are not able to, fully open. And I think as we go along, we learn more about borrowers to kind of get to the stage where we become the lender of choice for women borrowers or rural women borrowers across the country. And I want to qualify that about just about a percentage of our borrowers come from urban areas. The rest are all rural and semi-urban. Tisha, I can take a pause here.
Sure. If there are no comments from the book, please raise your hand or just start speaking if you'd like to comment. So, okay, while others prepare, maybe I have a question, Neha. Uh, you said that there are enough and more borrowers out there, but you are talking about a group of women that have not really been profiled as such. So, how are you getting around that challenge?
Tisha, it's very interesting that there is, when we meet borrowers, more likely than not, they have a CIBIL footprint. So they've borrowed before. And in almost all of the cases, this is a microfinance loan, which they've taken before. And we do have some microfinance channels also. I'll not talk about those because they're typically microfinance, but we operate our own networks as well, where we do meet ex microfinance borrowers who are no longer going to the group meeting because they don't have time to. They now need to be at their shop or their business for 8 hours, 9 hours a day. So it's not possible to make those meetings, and they've been running very successful businesses. Like the average vintage of the business we fund today is about 8 years. The median age of the borrower is 38 years, which is this is an experienced person in life. This is an experienced person in business, and yet the challenge remains that they would just hesitate to take a loan. Whereas if you go to a neighboring shop which is run by a man, it might be exactly the same. They'll ask for a 1 lakh rupee loan, whereas this woman borrower might say that okay, maybe I'll borrow about 20,000 or thereabouts. If you further go and probe questions like what would you do with this capital, or how capital could change the business or sustain the business even at the same levels, they have answers. They have very good visibility of what the business looks like over different seasons and how it has progressed over the years. You get very good answers, and yet there is this hesitation to borrow. There is this hesitation to borrow because you have not individually borrowed before. Any interaction you've had with a lender, and I've had this experience personally as well, where they need your spouse's husband's NOC, no objection certificate. I once applied for a housing loan from HDFC Bank, and I made a similar application to IDBI Bank, and naming both banks here. And both of them wanted an NOC from a husband or my father, if I'm not married, from my father. Now, why? Why should I have to? And if I'm borrowing 30, 40,000 rupees, I have to engage my entire family in that decision. I don't really want to take that hassle also. In MFIs, fortunately, because it's in a group, that hassle is a lot lesser. In individual borrowing, that is indeed a hassle. So there are challenges like that also, where our messaging has been that we don't need any of that. You run this business, you are the proprietor of the business, you should very confidently take a loan. Of course, there are rejections after that because of something or the other. But you should feel confident to take that loan. And all of our like pamphlets and other messaging also carry pictures of women, and we've also learned to carry pictures of two women at times to show that this is, should be comfortable for women to take that loan. And also this is just a, maybe we'll learn more about this, but if you have familiar faces, it's actually easy for you to um, take an action on that brand. If I put, a Kareena Kapoor on my flyer, even if I had her as a brand ambassador, I think I'll have lesser conversions than somebody more regular looking on the pamphlet or the brochure or so on and so forth. So just having some sort of familiarity is also important. And I also feel that that rural women don't fall to the same marketing that urban women do. It is not the same kind of marketing that, or the kind of same aesthetics would be the wrong word, but the same kind of marketing that urban women do, because it's not relatable. If I see an ad for, a loan product which is for the US audience, the content might be extremely absolutely relevant to me. It's still not, I'm not going to fall for it. I'm not going to act on it. And that those are some of the lessons we are learning. And we are also now kind of increasingly showing proof of concept by showing success stories of borrowers who come from the same geography, who might have a name similar to you, or who might, come from Tumkur or this, to show, to kind of build this proof of concept amongst women borrowers.
Sure, Neha. Agree with the difference in marketing to women in this segment is very different, either from marketing to men or from women in urban complexes. So we have a question from Pallavi. Pallavi, would you want to voice it?
Sure. Hi, Neha. Uh, Sneha, you spoke about the demand side of things, how borrowers think, who are the influencers, how you sort of communicate with them. Even if these are individual credit, you would sort of approach them in groups, etc., because that's how they condition or that helps. Would you also like to throw light on the supply side of things, which is really the investor side? And, for example, how does the gender split there looks like? What are their expectations? How would you acquire them? Are they patient enough to look at this kind of a segment, ready for NPAs? And really, what motivates them? Because there are other channels to invest, really. What is the
Yes.
real motivation behind investing here?
Yes, so Pallavi, that has been another. I mean, it's we run a two-sided platform. So on the borrower side, I would say that even with all these challenges, one, there are enough borrowers. That's, we just need to very solvable problems. On the lender side, it's the journey has been more comfortable, I would say, because the reason people are investing on India P2P is fundamentally because you can potentially earn higher returns. Over the last 2 years, we've delivered returns over 15%. This is after some NPAs, and there will be NPAs. So anybody who comes on to India P2P, I always tell them that you can, expect 1 or 2%, or sometimes it can be higher as well. Some NPAs are to be anticipated and possibly budgeted for in your return expectation. That aside, it hasn't been, there's a lot of unfamiliarity over what women borrowers are. In the first year, we don't have, like, we started maintaining a record of this after some time, but every week we would get a call from one or the other lender who would say that, how are you finding so many women to lend to? How are you finding so many business women? So there were some large lenders who had put in, 20 lakhs, 30 lakhs, and they would have a, let's say, 1,000 borrowers in their roster of loans given out, and they would say that, how are you finding so many women? And the general question is, are these women borrowing because their husbands are not eligible to borrow, or are they, it's just a front for somebody else, or is it just a charity loan? It's definitely not a charity loan. So it's taken us some convincing to convince lenders that these are actual business women. And the moment you talk about rural women, the general perception is that this is a disadvantaged woman, which is absolutely not the case. Our borrowers are what I would say are India's aspiring middle class, perhaps not middle class yet. The actual middle class, not the Starbucks going middle class, because that is another segment of consumers in the economy. And aspiring, they're very, I mean, they're good business people, they're prudent business people, and they just happen to be women. That's the only thing. And then, of course, we do tell our lenders that women have a lesser propensity to default than male borrowers. Women have higher CIBIL scores, and women-focused lenders have also done better. So those arguments are there, but it is still a bit of a gray area in terms of it. Lenders find it difficult to imagine what the borrowers look like. If I tell somebody, oh, this is going against a BNPL loan for somebody to finance their new laptop, you can imagine it, and that helps you build conviction or otherwise. But this is a lot more challenging. Now, coming to the data, about 30% of our capital comes from women lenders. And that is, I understand that the industry average would be around 14%. We are at about 30% right now. So there's higher conviction from women, which is great, but men also have a lot of money. So should they, should have male lenders as well. And but this question is also asked by women. This is not a gender specific question. It's just as much asked by women as well, that where are you finding these working women, as they call them, because it's not easy for lenders to imagine. And we have to, I mean, we kind of have to keep sharing information about borrowers to make that picture a lot clearer than it is. It's the argument is made that women run businesses, have higher propensity of success, they don't profitability, all of that. And yet we don't fund women owned businesses enough. If you look at data, the data will very clearly tell you, whichever way you slice and dice it, that it's good to invest in women, and yet somehow that doesn't happen because maybe there's some like wrong marketing that has happened in between. But I don't know what it is, you should tell me. But yet we don't follow the data when it comes to funding women.
Hi Neha, this is Sangya here from Aspire, and thanks for sharing. I two questions from my side. Firstly, since you said you have been operating for the last 2 years, how long did you take to realize that total digital doesn't work and you need more people on the ground, or rather branches and physical presence to make it work? And secondly, yeah, I think from my small experience that I have, I found that there are lots of women entrepreneurs. They are very, very needy. And I was surprised, like when I set out to build some, I would rather attract women customers to our platform, and I started working on this project. I was expecting very few women to come forth and ask for loans, and I thought that they would come on behalf of their husbands or brothers or whatever. But I found that they were genuine business owners who really wanted money. The only thing is they were not eligible for the loans. So yeah, so over to you.
Sanjay, so it took us, I would say that we persisted with our digital only intent for 4 to 5 months, which also I would say is too long because like they say, India mein sabko loan chahiye. So if you have as a lender, you have an offering, you should be able to get users if it's a fair, reasonable offering. But we were not able to attract the right type of borrowers with a digital only platform because there was just this lack of trust. This was also a time when these Chinese apps were being kind of shut down by the RBI. So there was also a little bit of negative opinion around just digital only apps. So which is why we do onboard the borrower completely digitally, like the KYC application, bank account check, everything is over the app. But we do have an agent who's present who also goes to your place of work, takes a few pictures, understands what you do, etc., etc. But to your question of how to find eligible borrowers, so one of the things that we benefit from is the fact that microfinance has created very good credit bureau coverage of rural women borrowers. I don't know which kind of borrowers you were targeting, but if India P2P goes out today and tries to, onboard urban women, I feel that the success rate might be lower because they would not have as well of a credit bureau coverage. In our case, we are still kind of almost at 100% non new to credit, non NTC borrowers. we also want to be a little bit more careful there because we have retail investors on the other side. So unfortunately, we don't have a lot of luxury to experiment with very new types of borrowers. But there is enough credit bureau coverage, at least in rural and semi-urban areas. But the digital only part did not work for us. That I did
Hmm.
realize.
I agree. I mean, yeah, I mean the quality of the people who come to the platform, if you're targeting urban areas, is definitely not what you would want. They are generally new to credit, and yeah, I mean it's interesting to know that. I mean, we all know that MFIs are working on rural women, and they already have some credit history. But the point is that you would need so many collaborations to reach to those women. So that's I feel that is something that we need to tackle with if we have to reach those women.
Sanjay, we actually do have those collaborations. So we do work with a bunch of partner NBFCs who kind of lend to the same segment or at least are operating in the same geography. So
Mm-hmm.
it's in what we've also learned in this sector is that first of all, one thing that I did not know much before starting India P2P was that how many NBFCs are there in India. The number is close to 10,000, and most of them are very, very small. I think just a handful would be more than 1,000 crores. It's
Mm-hmm.
a little more over 500 crores and thereabouts. So
Mm-hmm.
a lot of them, which are still operating which are still growing, but currently operating at a smaller scale, do have physical networks. I'm talking about NBFCs with
Yeah,
physical
yeah.
networks and may
Yeah.
make good partners to partner with. But one
Mm-hmm.
has to be very careful in terms of assuring that there is process alignment and you don't deviate from like I see a lot of digital lending platforms or digital lenders who will just take any type of borrower, who will
Mm-hmm.
underwrite any type of borrower. It could be like a company borrower, SME
Mm-hmm.
borrower, an individual borrower, a BNPL
Mm-hmm.
borrower. And my personal sense is that lenders who focus on a certain type of borrower, as narrow as you can go, given market size constraints, is the
Mm-hmm.
best approach. So even
Mm-hmm.
amongst women, like our decision not to go after urban women or not to go after women borrowers borrowing above a certain limit or new to credit women borrowers is deliberate in that sense, so that we just become good at underwriting this one set of borrowers, which we believe is a large enough market.
Mm-hmm. Okay. Thanks.
So, Neha, um, the loans that you provide, are those end use linked?
Those are end use linked, Risha, but we cannot, I have to be upfront that we cannot exactly go out and track whether it was used for that end use. Money
Well,
is
especially in cases when the sort of proposed utilization of the funds is to go into business. And while credit bureau checks are available, typically these would be for MFI loans. While for a loan that is being given for a business case, what gives you the confidence to maybe identify that this woman is a good business operator and I can bank on her? Is there data that you access? Are there parameters that you check for?
So, Disha, what I'll give a slightly longer answer here. So we are talking about borrowers, let's say microfinance women borrowers, the larger subset of women borrowers in the country. They have a CIBIL score. They generally have a good CIBIL score, even though it might be an MFI credit score or whatever. Like the median CIBIL score on India P2P is 727, and lending rates are 20% plus, so it's a great arbitrage to have. So one generally asks the question that why doesn't an HDFC bank or an NBFC, large NBFC, lend to them directly? The answer is that of course these are small loans. So for banks, 50,000 rupee loan would come at a few thousand rupees of underwriting cost. But even for some larger NBFCs, the challenge is that there is no proof of income. Like they run a business, but there is no proof of income. There is no Form 16, there is no GST payment receipt, etc., etc. So how do you really go out and understand what this person's income is, what kind of a loan can they take. And of course, there is this whole issue of seasonality to incomes as well. In some seasons, you will earn less, some you will earn more. But your EMI should be designed in a way that even in the lower income months, you don't have to save in the higher income months to pay it off in the lower income months, so on and so forth. And then coming to, then this comes to your question on, if you want to understand how this person is going to repay her loan, we need to understand how she makes money, and hence we need to understand the business that she runs. Now, I don't have alternate data to run a check on that business. I can't do GST, I can't do some of the new kind of platforms also that are coming up to do this. So, which is why this agent network helps, where we actually send the agent to your place of work. We take multiple pictures of your business, and we understand through this is question tree that comes up in the app as to how is it that you make money. Do you understand what is the seasonality of your income, and basically get some evidence of the business as well. It often happens, not very often, but there have been cases where, let's say, you claim to run a kirana store. I think we spoke about this as well. Agent turns up there, it's dusty and not kept well. That means it's a show business. You're not really interested in running the business. Your loan will not be approved. But by and large, we see a whole variety of businesses, from tailoring units, kirana units, to wedding decoration, where there's a full set and everything, who also do other events, etc. Karaoke businesses, so there's a business to do those kinds of rentals and other things. A whole host of, just a lot of variety in businesses that women run. And I just think that this big problem that we have, that whenever we think of a farmer or any other profession, including a business person, we just imagine men. But if we just kind of gave up that bias for a little bit, just looked around, looked at shops even around us in urban areas or wherever it is, you will see a lot many more women. You will certainly start observing a lot many more women.
Sure. Thanks, Neha. Folks in the room, please feel free to chip in, come in with your observations or comments. This is not just a dialogue between
Yeah,
Neha and I.
actually, I can really identify with what Neha said, because the biggest problem I had, even when I was running this, was that I couldn't get them to give evidence of the money that they are earning. I mean, they would say that this is my monthly income, but when you come to proof, there's nothing to show. And I mean, being a digital platform, it's very difficult for us to underwrite if we don't get that understanding of how much you earn. But it's interesting that you actually go down and check their business and whether it's physically present. It's like the due diligence exercise, which seems to be, I mean, it must be cumbersome and expensive to do this exercise, I would say.
Yeah, so it is, which is why it becomes very important for us to have a critical mass of borrowers in every geography. Because this agent is going, he or she is going, looking at the business, which is very important from a diligence perspective. Any lender needs to understand how this borrower is going to repay. And now that you're kind of out of the joint liability group setup, you don't have this comfort of one, borrower paying on behalf of the other, or the group paying on behalf of so and so borrower. So this is, which is why I'm also here, if I can have some ideas on how to get this critical mass bit going, because that would be a game changer, not in terms of us to grow as a business, but also to kind of make interest rates more palatable to this borrower segment. Right now, to share with everybody, our interest rates are MFI-like interest rates, which I would say are on the higher side, but we have to price in the cost of this diligence into it.
Do you often get referrals from MFIs for customers that say aren't part of groups anymore? Or what are the channels that you use today? You said NBFCs. So is it NBFCs own customers typically that are, for whatever reason don't meet their criteria and they're kind of referring to you, or how does that work today?
So what we do is that when we partner with, we can't have this, that's a very good question. So when we partner with an NBFC, which could be an MFI, but usually not, But when we partner with an NBFC, we cannot have this and or criteria that if this borrower is not eligible for your loan, they get an India P2P loan or the other way around, because there's a kind of misalignment of incentives here. So when we work with an NBFC, we kind of take over their branch. So this is their local branch, and branches are important because we are not able to go fully digital. The entire branch can only do India P2P loans. So if a borrower is not eligible for India P2P, she is not eligible for a loan via this partner period. But we also operate our own branches, and across branches, the idea is not just to go after only X or current MFI borrowers, but rather to go after, go to these business locations where you have shops, where you have other businesses running those business streets in every town, and go out and try and solicit borrowers from there. So, like if you go to, let's say, Tirupati today, there will be a commercial street which might have 100 shops. Maybe 6 of them would be India P2P borrowers, and an increasing number going further. But even like to kind of reiterate my answer to your question, where we do have partnerships, we don't have this misalignment. So the partner is also now needs solutions. We need solutions together to have this critical mass.
So Neha, as I understand it, from whatever I have heard so far, that you do the entire process of onboarding and KYC digitally, and when it comes to underwriting, you do the diligence first, and then you decide on whether to underwrite or not.
So, how the process works is that you apply over the app. So there's a basic check, like let's say as simple as a credit bureau check. And after this check is when our agent will go and visit you. So let's say you don't clear that initial check, then the agent's visit is not worth it. So it is only after that it happens, but a whole range of rejections happen after the check also.
Okay. Thanks.
And I also want to just quickly give a trend here that we also see a lot of businesses run by 2 or more women together. It's I kind of missed getting an exact data to share with all of you here. But what is happening is that as like I said, the average vintage of the business is about 8 years, and the business has grown over the years. Ideally, it has grown. So you need more team members, and then you end up having sometimes partners, more often than not partners, and then some employees. But we do see a lot of businesses which are run by 2 or more women altogether. More common in the south, a little less as you go north, but definitely very, very visible in the south.
Neha, we have a question from Tanuja. Tanuja wants to know, do you see differences in lender attitudes or biases towards women business border owners based on type or industry of business category, based on the industry they operate in or the size of their business?
That's an interesting question. So I'll share an initial kind of beta that we did. So when we started out, we had a group of potential lenders. This is even before we launched the platform, and we gave them a lot of details about the borrowers, like actual plausible borrowers. We gave them a lot of details, what they did, how long they had been running the business, their age, their location, etc., etc. And we came to this realization, like the lenders said that, this is just too much information. I don't really need to know what she does or what he does, etc., because you give me your risk rating of the borrower, or maybe at best her CIBIL score or thereabouts. So now we actually only show the risk rating of the borrower. We don't show what this borrower does as a profession, but we do have some lenders who come and ask questions as to what this borrower does. Now, when you read the profession, you'll get, Kirana store owner or so and so other type of owner. I don't think people have a lot of bias or judgment there, but this question still comes up like way too often, that is the husband running the business and the wife is just taking a loan, which no matter how much you share about the particular borrower, is just a hard bias to fight. Even today, if you like Google a woman business person's name, the second or third most common search this thing is so and so husband. So if there's a woman in the media, and I'm not talking about celebrities, that's a different league altogether, or a woman professional just of some interest, people just want to know who the husband is. So I think that bias kind of percolates down here as well.
We have another question from Devyani, and I think we'll have time for one more question here. What other aggregators have you tried? What's been your experience of skilling institutes that women may have been some years ago, suppliers, schools, parents, etc.?
Sorry, I can't read the question.
It's in the chat.
Sorry, I can just ask, but so you mentioned the channels that you're using and that aggregators of sort of groups of women is a challenge, right? So I'm just wondering what other channels you've tried or what types of aggregators you've tried before narrowing down to the branch-led model. For example, have you been through skilling institutes where, say, business owners may have gone through that process, or have you like been through suppliers of these shops, wholesalers, etc., or for example, schools where parents are business owners, etc. Like I don't know, I'm just throwing things out there, but have you tried stuff like that or anything else?
So Devani, not with India P2P. So but we have tried this stuff before in my previous company, and I think that experience will help me answer this. But at India P2P, we've been cautious of two things. One is that our borrowers should have some credit history. Like we said, we have retail investors on one side, so we want to be, very like careful about their money. So it's best to lend it to borrowers who borrowed before and shown that they are responsible borrowers. Now, because of that, it's very hard for us to uh, partner with factories which employ women, or which is like a good possibility, but it's hard because they don't have access to information, even if it's anecdotal information that this person has borrowed before. And the second is that we want to partner with those kinds of enterprises or organizations that have some collection capability as well. While the collections may be UPI and NACH, but often people fall back. There are payments failures and thereabouts. So this entity should have some discipline to collect responsibly, and or kind of to go out and meet the borrower and collect responsibly. But in my previous business, we partnered with a whole host of women's networks. We partnered with many to kind of finance or sell stoves in some kind of easy installments. And the most successful channel for us back then used to be garments factories, where a lot of women would come and provide tailoring services that were, supplying to big brands outside or locally or thereabouts. And there you had this kind of factory floor full of women. You could just have very simple messaging, quickly say that, okay, this is going to cost you 150 rupees a month to have this stove. There could be a salary deduction or sometimes no salary deduction also. Those channels worked well, but we were at that point in time, since we were not a lender, we could not go out and check credit scores or thereabouts. And we were, frankly speaking, less concerned about, we were very concerned about repayments, but we are very, very, very concerned right now. So hence having this infrastructure in place becomes important. But you're right, there is definitely, I agree that there is scope to reach out to more potential borrowers this way as well. There are other networks where women come and aggregate, where I also think that it's just easier for women to discuss and make quick decisions on borrowing or perhaps other services also.
Great. Thanks, Neha. Thanks for taking a plethora of questions and really being vulnerable about some of the challenges that you're facing. And from I think the key points that I remember is the maybe replicating the group experience and the cost structures are also something that are currently a concern. And hopefully we'll continue having these conversations and gather more perspectives on how to navigate those. Thanks everyone for joining in. We will again meet on the 8th of next month with a new theme. Hopefully, looking forward to say more discussions. Meanwhile, I wanted to maybe plug in one little effort that we are taking on our side. We are creating a repository of everyone that's working in this space. So over some time, we've realized that a lot of us are probably in our silos grappling with the same questions, but and ऊपर से we know okay अच्छा ये इस domain में काम कर रहा है, that person's working on that domain, but we don't really know the depth of their activity and exactly what they are grappling with. So with that intention, we are creating a repository of folks or stakeholders in within the industry and within this focus area, and trying to document what their current initiatives and interventions are. And offline from our end, we'll reach out to you, and perhaps if you could, spend some time helping us populate that repository. So again, thank you so very much for joining in, and hope to see you all again.